Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad. Well, it has been a range-bound day so far, and if you look at both the headline indices, both the Sensex and Nifty have been quite flat right now. Sensex up by about 1 point, and Nifty also holding above that 26,200 mark, so to say. But yes, broader markets that is once again not participating in the trade today, and they have been underperforming the benchmark indices as of now. If you look at the Nifty Mid-Cap Index, that is showcasing a decline of about 0.1%. Small Cap Index also losing in the trade with about 0.2% decline. But sectorally, it has been the day for the Nifty Auto Index because that has been leading the gains, showcasing a gain of about 0.5% as of now. That is followed by the pharma and the PSU banking pack as well. That has also done quite well in today's trading session. But from a sectoral point of view, IT and banking stocks, which were driving the market gains this week, they have turned quite flat as of now. Bank Nifty Index quite flat with a positive bias. Nifty IT Index has also flipped into the red, but yes, flat with a negative bias as of now. But yes, for this week, Nifty has been up for a little more than 0.5% as of now. But yes, it's been the third straight week there when the Nifty has been up and running. Remember that yesterday it was the day's high level, so some consolidation is some warranted in the index, and of course going into the next week as well. But yes, next week also we'll be understanding how the further markets shape up, given that we have Fed and RBI policy meetings as well. So let's see whether Nifty can hold above this crucial 26,000 mark, so to say, as of now as well. But yes, now moving on to understand how the last minutes of the trade look like and how you should be positioned in an environment like this, I'll go across to my technical expert of the show, that is your Vishnu Kant Upadhyay, Assistant Vice President Research and Advisory at Master Capital Services. Vishnu, good afternoon. It's been a good week so far for the markets overall. Yesterday we saw Nifty hitting a new high, but with new month starting next week and we have the awaited Fed and RBI policy meetings, what level should we watch out from the Nifty front?
Well, Lovisha, a very good afternoon, and thank you for having me on the show. After a long period, almost 297 days, we witnessed a fresh all-time high. Yesterday, Nifty hit around 26,310, and keeping the finger crossed that all thing is going, on a good path. And definitely next week we are going to see, some fundamental triggers from central banks like RBI and next to next week Fed, US Federal Monetary Authorities. There is a growing expectations that both central banks are going to cut interest rate by 25 basic points, and that's why market is moving towards north. So keeping all these development, on radar, that we are expecting at least by the end of this calendar year, we are expecting 26,700 or 26,650 will be on card, and we are, recommending to adopt buy the dip strategy.
Okay, all right. Buy the dip strategy for now. Vishnu, what about the mid caps? Because they have been fairly resilient this week, but there has been no participation which is coming from the small cap index. So what can we watch out next from the broader end of the markets?
Well, so mid cap also hit a all-time high, but yes, for last few trading session, it is not participating in the market rally. In fact, talking about the Nifty small cap, that is still trading below around 10% from its all-time high. But yes, I believe if we talk about the mid cap, we are going to see some participation from the index, and keeping finger crossed that we are going to see 61,500 around odd levels in days to come.
Okay, all right. Now let's shift focus and talk about the Nifty Metal Index. Of course, it did see some catch up this week as well, but despite not registering good gains in the month of November. So what can we expect going ahead? Can we expect the Fed rate cut environment to revive the sentiment in the metal index?
Well, definitely depends on that. But technically, if we see a metal index, it's currently struggling very close to its a 21-day exponential moving average, and it's a well above its a 200-day exponential moving average. So longer, a time frame is a quite bullish as long as prices are trading above 9,700. But in a short term, prices need to move up 10,400 to regain the short term strength. So yes, for a long term, index is still looking quite bullish, but for a short term, as we said that the level should be watched. So let the prices move above 10,500, then definitely there will be a buying opportunity in metal index. So currently we can go, stock specific. Sector as a whole, we cannot say is looking good, but some stocks like Vedanta, Hindalco is looking quite good. So we can, keep our focus on that stocks.
Okay, all right. Hindalco, Vedanta, those are the counters we need to watch out for. Vishnu, let's move on and talk about Nifty FMCG index. I mean, it continues to be a non-mover this week, and even so far this month also, it's not being, it's consolidating as of now. So, what are you expecting the next moves to be, or anything that you're finding attractive from these current levels?
Well, so from Nifty FMCG, it has been a very range bound and oscillating between a tight range of 55,800 on the higher side, while 55,000 on the lower side. So index heavyweights like Nestle, HUL, ITC is not looking very good for a short term perspective, but for last two a couple of days we have seen HUL is gaining momentum. So we can again go stock specific for FMCG, and HUL is looking quite good. So from a level point of the view, if you talk about the Hindustan Unilever Limited in today's trading session, prices regain it's a 21-day exponential moving average, and yesterday it regained 200-day exponential moving average. It is also started to form a higher bottom kind of pattern. So in FMCG, I am quite bullish on Hindustan Unilever Limited. One can buy a stock on a current market rate, that is 2466, having a stop loss below 2400, while on the higher side 2550 will be on card very soon.
Okay, all right. That's the cue coming in from the FMCG basket. Let's move on and talk about the defense stocks as well, because this month they have, and even for this week also, stocks have seen quite a bit of a profit booking as well. But yes, coming to you, Vishnu, I mean, on the defense basket, and anything that you are liking from the space, because we have seen a couple of counters see a little bit of a profit booking. I mean, BEML, HAL, all of them have declined in the trade for this month.
Okay, so sector is not looking good, but we can keep our eyes on B. Although it is currently trading it's a 21-day moving average, but yes, it's a trading well above it's a short-term bottom that aligns around 400. So as long as prices are trading above 400, we can expect prices to move higher towards 430. So from the risk reward point of the view, this level is a quite good to accumulate a long positions. On the higher side, 430 will be on card, while on the lower side, 400 should be used as an stop loss.
Okay, all right, all right. Let's talk about some of the individual movers of the day as well. We'll first talk about GAIL. I mean, the stock did see a sharp slide today after PNGRB issued a revised transmission tariff rates that grew by 12%, but it was lower than what the company was seeking. Now, brokerages have turned quite cautious on the counter following these revised rates. ICI Securities have said that they at least were anticipating a 15% increase, but the current 12% increase means about a 2 to 5% hit to GAIL's EPS for FY27 to 28. UBS have also weighed in the counter and said that the 12% tariff hike does not mean an equal increase in the realized tariffs, and that the increase in the realized tariffs could even be lower as well. And that's why, the brokerages have turned cautious, and you can see a sharp slide of about 4%, but it has recovered from the day's low as of now. But yes, Vishnu, I mean, what would you suggest investor to do? Is it an avoid at the current juncture?
Yeah, definitely, Lovisha. The fall has been attributed to the tariff-related news, as you put it. But technically and chartically, if I analyze the stock, so prices are definitely slipped below its short-term moving averages, that is 55 and 21-day exponential moving average, and also 100-day exponential moving average. But still, prices are well above so 169, a very crucial horizontal support. So I believe for a very short-term or very riskier, investors or trader, he or she can buy the stock as long as prices are above 169. On the higher side, I'm expecting 180 and 185 could be on card.
Okay, all right. 180 on the cards as well for GAIL. Let's take another stock in focus, that is your Lemon Tree. The stock has done well today, and the company did say that they have signed a license agreement for Lemon Tree Hotel, which is in Surat Airport, and a franchise agreement for Keys Prima as well. Vishnu, I mean, the stock has been, however, exhibiting a negative trend, so to say, in the past, so far this year. So can we expect more downside to be possible?
No, basically, chartically, stock has rebounded very sharply from the proximity of its a 200-day exponential moving average. Although it is currently trading below its a falling trend line resistance, but the way prices has rebounded from the vicinity of 200-day EMA. I believe the stock structure has been shifted to bullish, and we should adopt buy the dip opportunity. One can go long in the stock with keeping a stop loss below 155, while on the higher side we are going to see 165, 175 in the stock.
Okay, all right. That's the view coming in for Lemon Tree Hotels. Let's take another stock in focus. That is your Dilip Buildcon. Well, the company has won about 879 crore rupees of NHAI highway upgrade project in Tamil Nadu itself, and that's why you can see the stock has been exhibiting good gains, 1.5% gains coming in for there as well. And Vishnu, coming to you, I mean, the stock recently has also seen quite a good breakout. So, what can we expect going ahead? Can the gain sustain?
Well, so this trading session prices formed a sort of bullish engulfing pattern. It completely engulfed the yesterday's, close and high candles. So I believe definitely technically prices are, garnering momentum, and I believe on the higher side prices should contain this rally towards 510, 520. So one can definitely adopt a buying opportunity here, and a stop loss should be maintained below 464.
Okay, 464 as a stop loss for Dilip Buildcon. Now let's talk about an interesting brokerage note that came in by Jefferies on real estate sector. Now what the brokerage has been saying is the new launch momentum is picking up in the month of November after a festive shutdown led slowdown in October across the residential markets, and listed developers have had a strong start to the year. And Jefferies estimates that its coverage universe is expected to deliver about 25% of pre-sales growth in FY26, and they have picked out Godrej Properties and Lodha because they believe that they're likely to post some strong new launches and sales performance in the second half of FY26 as well. Vishnu, anything on Godrej Properties and Lodha, because they have been underperformers, but do you believe that the RBI policy next week is going to trigger a shift in this investor sentiment for not just this stock but of course the entire realty basket?
So definitely, RBI policy will boost consumption basket as well as a reality basket as well. So technically, if I look, this stock is has been a very laggard in past few months. So technically, it is currently trading below its all key moving averages. That is 100, 200, 55, 200 to 21-day exponential moving average. But on another front, it is also forming a sort of base formation. So for a long-term buying, we can consider this stock, although it is not giving any sign of rebound from the present juncture. But yes, as I can see, it has started to form a sort of higher bottom kind of pattern. So yes, one can go long in the counter, and stop loss should be a little quite, higher. That is 1935. Almost we can say 8% lower, but on the higher side we can expect 2500 on the card. Yes, for a long term buyer I would definitely say Godrej property is looking quite good for long term investment, not for a short term investment.
Okay, all right. Let's move on and talk about another stock in focus. That is your Yatharth Hospital. You can see the stock is down by about 8% as of now. We did see a block deal on the counter as well, and that's what has been weighing on the counter as well. Now, the company did see about 0.5% of its outstanding equity change hands in a block deal, which was at a price of about 719 rupees per share as well, taking the total transaction to value to about 32 crore rupees. And that's why you can see that the stock has been under pressure as of now. Vishnu, for you, Yatharth Hospital, how does it look? I mean, right now the stock has been trading at about 3-month low.
Yeah, in today's notification, it is down around 8%, and still it is looking to take out this falling streak, and that streak should be containing around 666. I mean on the lower side we can expect further down move from the present juncture. So I think one should stay away from this counter. Let the dust settle, and in short term, I would say as long if prices maintains to trade above 650, then we can consider going long in this counter. But for now, we should avoid this counter.
Okay, and avoid for Yatharth Hospital then. Right, let's move on and talk about Paytm. That stock has been in focus. It's up by about 2%, and that did come in after Goldman Sachs has upgraded the shares of the counter to buy from a neutral rating. And they've also increased the target price on Paytm by more than 100% as well. Now, what they believe that is that the regulatory environment, which had been previously a key drag on its stock price in its past, is now incrementally getting better, and that's why they've upgraded the stock to more than 100% itself. Vishnu, for you, Paytm, how does it look like? I mean, so far this year also the stock has been exhibiting quite a good trend.
Yeah, definitely, it's a very trend on the chart. I believe I'm expecting 1400, 1420 should be on Carter very soon because prices are trading above their all key moving averages. Apart from that, most of the technical indicators like MACD, RSI is also exhibiting a bullish crossover in the counter. So the counter is getting support from all front on from the price pattern from technical indicators. Apart from that, volumes has been a very good, very used in the counter in the recent rally. That is also indicating that there is some fresh participation in the stock. So keeping all these development on card, I'm expecting 1400, 1420 should be on card very soon.
Okay, 1400 can be on the cards soon for Paytm. That's quite a bullish counter to say. Now, let's move on and talk about 63 Moons Technologies. The stock is seeing a good momentum today, 18% gains coming in for the counter, given that NCLT has approved the long-awaited one-time settlement scheme between the National Spot Exchange and its specified creditors as well. Right now, the stock is at about 16% gains. Coming to you, Vishnu, for 63 Moons, of course, a good breakout for the counter from 700 to 900 rupees.
Yes, definitely. There has been a very good, breakout in this counter. But on the same side, I would say that one should not, jump in this counter because the stock is already up 16%. So there could be some correctional fall in the stock. So whenever we, witness such kind of rally in the stock, so decreasing 5%, 6% in next trading session is a quite obvious. So definitely structure has been shifted bullish, but on the present juncture, I would not say go long. Let the prices come down towards 860, 870 odd levels, where we can build a long positions in the 63 moves.
Okay, all right. That's the view coming in for 63 Moons. Let's discuss about another stock in focus, that is Voltam Transformers. That stock has done well today given that it has received an LOI, letter of intent, from Gujarat Energy Transmission Corporation for 8500 crore rupees, 85 crore rupees order, which covers the supply of various ratings of power transformers. And the order involves the design, manufacture, testing and supply of power of transformers as well. Vishnu, I mean, it's a good breakout for the counter. I mean, percent gains, and for the past 1 month also, the stock has done quite well despite, showcasing a negative downtrend. So can you believe that the gains would sustain going ahead?
I mean, gain has not been sustained. The prices surrender all its gain in initial trading hours. We saw prices gaining towards 8590 odd levels, and it just retraced entirely gain. So I believe one should wait because prices are oscillating in a very tight range of 8700 on the higher side, while 7900 on the lower side. So either prices give a breakout on the higher side or towards the lower side, then definitely trend will clear. But as long as prices are trading below, trading in this range, I would say then one should avoid this stock at the current juncture.
Okay, and avoid for Voltam Transformers then, all right. Let's move on and talk about Seagull India. That stock has risen today, given that the company has announced that its wholly owned subsidiary Seagull Infra has emerged as the lowest bidder for 1800 crore rupees of redevelopment project in Madhya Pradesh itself. Seagull India, today the stock has been doing well, but yes, Vishnu, what do you believe? I mean, the stock still has been quite sideways, 250 to 240 rupees.
Yeah, definitely. Visha, the stock has very lenient, very basic in last few months, and still, despite today's rebound, prices are still trading below its crucial 34-day exponential moving average that has been acting as a very stiff resistance since long. So I believe let the prices move over 250 on a daily closing basis. Then in that case, we can go long for the target of 270, 275. But as long as prices are trading above their key moving averages, that is 34-day exponential moving average that aligns around 250, I would not say go long in Kaigal at a current level.
Okay, that's the view. Let's move on and talk about Reliance Industries. Well, the stock has done well today right now. However, the stock is quite flat with a positive bias. We did see Jefferies reiterating its positive stance in this stock, and they've projected about 14% of potential upside from its previous closing price as well. They've given out a buy rating on the counter and given out a target price of about 1785 rupees per share. And Jefferies has said that all three businesses, be it your digital services, energy and retail, they're delivering double-digit growth in the ongoing financial year so far. Going ahead also, they believe that Jio's impending IPO is expected to lead tariff intervention in the near term. Also, they expect FMCG segment to be ripe for value discovery in the calendar year 2026. But yes, Vishnu, Reliance Industries, what's your view? I mean, the last 2 months, the big boy has seen a good buying interest.
Yes, definitely. This rebate counter, has been a very in center point in taking the index towards north, and we are still expecting there is a much room to expand the rally in Reliance Industries Limited. We are quite confident that prices are all set to see 1650, 1660 by the end of this calendar year. I mean, by the end of December. So buy the dip strategy will be a quite approachable in this counter. Let the stock come down towards in a staggered way. We can go in this counter, on partial buying can be done at a current levels, and rest the buying could be done on fall close to 1500. Having said that, on the higher side 1650, 1660 will be on card.
Okay, 1650 next on the resistance level for Reliance Industries. Let's move on and talk about Bandhan Bank, given that the company did approve the sale of its NPAs and written off loan portfolios through a bidding process, which involves the ARCs and other permitted transferees as well. And that's why the stock has done well today. Vishnu, I mean, the stock did surpass that 170 mark, but then right now the stock has been quite sideways. So what do you think for the near term looks like for Bandhan Bank?
I mean, I'm not expecting positivity in the counter definitely. I mean, it's all key hurdles. First hurdle aligns around 155. So as long as prices are trading below this level, 155, so definitely the opportunity will be sell the rise, not buy the dip. So I mean, for a very conservative players, I would say stay away from this counter. There are so many banks, especially PSUs, and both private banks are doing good. So apart from Bandhan, there are so many banks like Federal that are doing good. So one can shift their focus towards them, not this counter.
Okay, all right. That's the view coming in for Bandhan Bank as well. Let's move on and talk about SRF. That stock has done quite well, given that Axis Capital has upgraded the stock to buy from its earlier ad rating. However, the brokerage has trimmed down its target price. But in its note, Axis Capital has said that the company's chemical business offers a healthy medium-term growth potential and expects 23% CAGR in this segment over FY25 to 28 itself. But yes, coming to you, Vishnu, for SRF, the stock has done well today. And right now, the stock, however, has been a little sideways. But still, I mean, the stock so far this year has also given out 32% returns.
Yeah, so today, price is jumping around 3%, and they also crossed above its 234 exponential moving average, which is indicating that the short-term trend has been shifted bullish. And on the higher side, we are expecting 3100 will be on card. So one can go along in the counter, and a stop loss should be placed below 2840.
Okay, all right. That's the view coming in for SRF. Let's move on and talk about VST Tillers. That stock has also done well today, given that the company unveiled its first ever electric power tiller and electric power weeder as well. And this launch definitely marks the company's entry into the fully electric farm machinery segment itself. So that's why the stock has done well, 2% gains coming in for the counter. Vishnu, past 1 month, the stock has underwent some profit booking, but do you believe that it can pull back from those levels?
I mean, in today's trading session, we have seen prices jumping towards 5,770 odd levels. But, again, prices surrender all the gains, and currently it is trading around 5,598. So, short-term trend is definitely bullish, because prices are forming a higher highs, higher bottom kind of pattern, and stock is comfortably trading above the 34-day exponential moving average. But the way prices behave in today's trading session, it is indicating that we can witness some sort of profit booking in days to come. So definitely, buying at a current level will not be prudent. Let the prices come down towards 5,400, and there we can build a long positions, and stop loss should be placed below 5,200 in that case. While on the higher side, we can see 6,000.
Okay, all right. Higher side, 6,000 could be on charts for VST tillers as well. Let's move on and talk about Ashoka Buildcon. I mean, the stock has not done well today. 6% slide came in, but however, it's recovered from its day's low, and right now it's down by about 3% as of now. This came in after the company has temporarily suspended from participating in the ongoing and future bids of NHAI for 1 month itself. And that's why you can see some negative sentiment has creeped into the counter as well. Vishnu, I mean, the stock anyway has been quite in a lower trajectory. But what do you believe next? I mean, can we see further downfall from the current levels?
Stock is getting a very close to its crucial horizontal support that aligns around 170, 169. So yes, there is a possibility that prices can take a U-turn from the vicinity of a present juncture. So from risk reward point of the view, definitely, and from technical point of the view, we can definitely would like to say one can go long having keeping a stop loss below 168, while on the higher side we can expect 188 in this counter. But remember, structure is bearish because prices are trading still below its all key moving average. We can only and only expect a short term rebound from the present juncture.
Okay, short-term rebound from the current juncture could be possible. All right, let's take another let's take another stock in focus. That is your Reflex Industries. The stock has been in demand today, given that the company has secured an order which is worth about 100 crore rupees from a large business conglomerate itself. And under the terms of the order, Reflex will be responsible for excavation, loading, and transportation of the pond ash or bottom ash. Vishnu, I mean, the stock has done well today, 7% gains, but it has been sliding down in the past 1 month. So, what do you expect next?
So by this news, we can expect some sort of short covering. I mean, some sort of buying, and that buying should be containing around 378. But still, structure is weak, and prices are still trading below. It's a 200-day exponential moving average. So if prices wants to shift the trend, bullish, then prices need to move up 390 with a daily closing basis. So as long as prices are trading below 385, 390. So we cannot say that the trend has been shifted to bullish, but yes, this bounce can take prices further higher towards 377. So one can go long for that target, but still for long-term buying, one should wait for prices to close above 385, 390.
Okay, 385 to 390, that is the level. Let's talk about one of the top Nifty losers right now. That is your Shriram Finance, 2% downtick coming in for the counter. Vishnu, what do you believe? I mean, however, in the last 2 months, we have seen Shriram Finance seeing a spectacular rally. Going ahead, do you believe that some consolidation is warranted in the counter?
I mean, this is profit booking counter, and I am expecting the prices come down. It will be a very great opportunity for a long-term buying, but it is mildly down 1.5% in today's trading session, and technically it is forming a sort of bearish engulfing pattern on a daily graph. So we can expect some sort of a profit booking in days to come as well. So let the prices come down towards 820 or 810. So around those levels we can go long in the counter, and stop loss should be placed below 805, while on the higher side I'm expecting 880, 890 will be on card very soon.
Okay, all right. 888.90 could be on the cards soon for Shriram Finance. Let's address one of the top Nifty gainers as well. That's your Adani Enterprises. The stock has been seeing good gains today. A percent gain coming in for Adani Enterprises. Vishnu, for you, how does the stock look like? I mean, in the past 1 month, we have seen that the stock has slid downwards and it's been quite range bound so far this year as well.
Well, so it's a crucial horizontal. Look at the chart, it's almost so yes. With the validation of 2240, prices can move higher towards 2450. So one can go long at a current level. Stop loss should be placed below 2200, while on the higher side we are going to see 2400 and 2450.
Okay, all right, 2450. All right, the last trade's coming on your screen where the Nifty has settled flat in the red, still above that 26,200 mark as of now. But yes, it's been a flat with a negative bias for the Nifty 50. But yes, it's the third straight week when the Nifty has logged gains. And for this week itself, it has been up more than 0.5% as of now. Sensex is also closed with about flat with a negative bias, 25 points decline coming in for the Sensex. Bank Nifty is also settled flat with a negative bias. And if you look at the Nifty Mid Cap Index, also flat with a negative bias as of now. So it's been a quiet day for the markets. It's been a range bound day, given that since yesterday also, after Nifty hit a record high, we have seen that the markets have been fairly range bound and have been quiet and have been fairly quiet. And today also we can see that it's been a quiet day for the markets, given that there is also thin volumes on account of US markets shut on account of Thanksgiving holiday as well. So, but yes, next week we'll see how the bigger picture emerges for the markets and how they react to the policy meetings as well. So yes, so to say, right now the markets, however, are waiting for some bigger triggers for the next week as well. But yes, let's take a quick look at the sectoral indices, how they have performed as of now. Nifty Auto Index closing in the green, 0.5% gains coming in for the Nifty Auto Index. Bank Nifty has done well, closing flat with a positive bias. But yes, for the week also, Bank Nifty has done quite well. Since it's the last day of the November month also, Bank Nifty has been one of the top sectoral performers. PSU banks particularly have led the rally for the month of November itself. But today, if you look at the PSU bank that have been closed flat with a positive bias, 0.1% gains coming in for the Nifty PSU bank. On the other hand, if you look at Nifty FMCG, that is also closed flat with a positive bias. On the other hand, if you look at some of the stocks that did not do well, that includes the likes of your IT stocks, which have sulked in the trade, oil and gas, realty stocks also have seen a decline as of now. But yes, one of the top Nifty gainers has been your M&M. That has showcased a gain of about nearly 2%, and it is coming after a day after it has launched an electric 7-seater SUV, that is XEV9S, and the 7-seater SUV will be starting at about 19 lakh rupees. The bookings of the car will begin on January 14 and the delivery will be starting from January 23 next year itself. But Vishnu, coming to you, I mean, the stock already has seen quite a good uptrend this year. What can we watch out next for M&M?
Well, so definitely, entire auto pack is doing very good. So this is also trading a very close to its all-time high level. So this, buying and this bullishness is likely to remain intact, and I'm expecting 4,000 levels, 4,100. Stock can approach. I mean, the buying approach should be very in staggered way, because the stock is currently trading. It's an all-time high. So I think putting entire money in this counter at this juncture could be a little risky. So there could be some, corrective fall in the stock. But yes, because the RBI's policy meeting due next week, the entire auto pack will be in focus. So yes, stock is looking quite good. And for long-term investment, one can go along in this counter. But for a short-term and for swing trading in staggered way, we can adopt buying in this counter.
Okay, all right. Just one last question before we let you go. Vishnu, what's your top picks? Anything that you're liking at the current levels?
Well, so I'm also picking, stock from the auto ancillary pack, and that is Samvardhan Motherson. And yesterday we have seen a very sharp breakout from the triple top kind of pattern. And in today's trading session, prices, has been traded almost flat. It closed the day with a meager gain of 0.15%. Well, so I'm expecting another 10% rally in this counter, and on the higher side, 130, 132 definitely will be on card. And technically, if I provide a stop loss, the stop loss should be placed below 108. So yes, Samvardhan Motherson will be our top pick for a short term buy.
Okay, all right. Samvardhan Motherson, one of your topics for this. All right, with that, we have to let you go, Vishnu, but thank you so much for your time and joining us.
Thank you, Lovisha.
All right, let's take a stock of the markets. Of course, it's been the third straight week when the Nifty has closed in the green, and it has closed in the positive territory. But yes, do remember that we also hit an all-time high yesterday, and that's why some consolidation has been there in the markets from the second half of yesterday's trading session to today as well. And of course, some thin volumes also playing out in the markets as well, given that the US markets have been closed. But yes, for the week, it has been the Nifty PSU banks that has been one of the top sectoral performers of the day as well. Apart from that, we also saw some good traction that came in for the Nifty private banks and of course Bank Nifty as well. But yes, for the entire month, we have seen that Nifty IT index has done quite well, showcasing a gain of about 5% itself. and that has also come in as quite a positive cue as well. But yes, what did not do well this month was your Nifty defense stocks. Nifty defense has seen a decline of about 1.5%, and Nifty even for the Nifty Realty Index also showcased some bit of a profit booking in consolidation for this month itself. So yes, all in all, it has been a steady day, and it's been a steady month for the markets as well, because both the headline indices have gained about 2% each for the Nifty and Sensex, and however, the broad end of the markets, they have failed to catch up. But the major pain point has been coming in from the Nifty small cap index, which has declined about 3% for this month. But mid caps have been fairly resilient in comparison. So yes, we'll watch out in the upcoming month itself whether or not we can sustain those levels, and of course whether or not the broader end of the markets can play a catch up as well. But yes, it's a positive start to the December series. Let's see whether or not we can continue with this positive momentum as of now. But yes, Nifty did end a 14-month low to hit a fresh lifetime high yesterday, and investors are hopeful that this could sustain through the month of December as well, because we have seen that Nifty has closed higher 60% of the time in the past decade as well. So yes, much look out to go for December. So let's see whether or not these gains get sustained. But yes, to understand the larger picture of the markets, I'll go across to my second guest of today. That is your Radha, Raman, Managing Director and CEO of Swyom Advisors, joining us to understand how you should build your portfolio in the market like this. Radha, good afternoon. I mean, yesterday it was the day when the Nifty hit a lifetime high. But broader end of the markets, they continue to feel the pain. So do you expect the large caps to continue to lead the way going forward?
Yeah, first of all, thanks for having me on the show, Lovisha. So basically, if you look at how things have moved ahead, this whole month, large caps have rallied and we had a 2% Nifty increase. But if you look at the Nifty, small cap has in fact close to 3% negative. So going forward, it seems that there will be a catch up. The small cap and maybe to an extent mid cap will make a move. But first of all, I think the movement will move mostly in the large caps. I think given what we have seen, this will continue. Even post the rate cut, I think the first rally will come in large caps, and it will basically spill over to small caps. And given if there are reasons in terms of you look at portfolios, a lot of portfolios have not moved. In fact, portfolios down in spite of Nifty being very high. That's the reason I think that's very important to know that the large caps have moved ahead. But we are waiting for certain policy triggers to happen, the rate cuts to happen. That too will cover more in terms of the movement ahead.
Okay. Radha, what about the FI outflows? I mean, that has been a major concern for our markets. And while India has underperformed global markets this year, we did see that in this month itself, the trends got reversed. But what do you expect the upcoming months can hold? Can we see a shift in the FI behavior, or is that still some time away?
I think most important thing if you look at is most an area in terms of is the rate cuts and the trade deal happening. And the third important thing is more in terms of numbers. So if I look at the numbers in terms of quarters, have not moved yet. September has shown a lot of signs in terms of positivity about the numbers. Most of the sectors have done well. And I think we'll see the trend upcoming in the third quarter and fourth quarter as well. And we'll see the FIs returning. In fact, they'll follow the numbers and they're definitely bound to come back and buy in India. So it will be positive, I think, maybe third quarter onwards when the results start coming in. FI flow will be very, very positive.
Okay, all right. Some positive momentum can kick in. But yes, rather next week we have the Fed meet, which is also followed by the RBI meeting. Are you in the rate cut campaign, and what are you expecting next?
So we expect rate cut both in Fed as well as RBI. And in fact, given the benign inflation in India, I think we might have sharper rate cut in India. So RBI might oblige us with a higher rate cut. Actually, that can spur the economy, and in fact, a lot of rate-sensitive sectors will be quite positive. So we are very hopeful, and in fact, government might push, the RBI might push for lower rates. I think that should be very positive for the economy as a whole.
Okay. Rather, let's also talk about the second quarter earnings. I mean, that was led by the OMC stocks, and now we have the soft crude prices also, and with the probable peace deal between Russia and Ukraine. Yet to see over the weekend, we'll see whether or not there is further development on this particular front. But do you expect better quarters ahead for OMC stocks?
I think quarter should be good, and going forward, if I look at from a crude pricing also, I think crude is settling close to 62 to 65 kind of a range. And given the uncertainty is going out of this Russia-Ukraine war as well, so crude should settle down. And given the crude settling down, these margins will keep improving. And with a lesser government intervention, I think the oil marketing companies should start doing well. In fact, they have already done well, and then that should move forward. And this, I think, this quarter should be good in terms of how this companies even moving forward ahead. So that will reflect into good earnings for the OMCs.
Okay, okay. Radha, what about consumption stocks? How are you placed on those? I mean, staples did see a weak second quarter and they continue to see some intensified competition as well. So, do you expect, how do you expect them to perform in the upcoming quarters?
I think consumption story will be the most important story. If I look at, there are three engines the government is basically trying to do: the interest rate cut, the GST cut, and the income tax cut. I think when we combine these three, the whole consumption story moves in and kicks in to a very large extent. I think we saw good numbers, especially if you look at last 8 days of September, which will flow in October numbers as well. And I think whatever channel checks we have done for October and mid-November, we are getting very encouraging numbers from the companies, and we expect consumption stocks to do very well. And in fact, it can be a good double-digit growth for a lot of companies. So moving forward, I think consumption is the area where we should be in.
Okay. Any sub-segment that you're bullish on, Radha? I mean, apart from the staples that we were talking about earlier, jewelry or even, innerwear or QSR for that matter?
So we are very bullish on the jewelry segment, and not only in terms of the branded jewelry, in terms of what they're doing, but also the companies which manufactures for them. So the whole idea is going to do very well. The kickoff, if you look at from a seasonal market, has started very well. And in spite of gold prices, silver prices being very high, I think there's a lot of customer demand and push, and our channel check suggests that the jewelry demand is going up. In fact, there's a lot of investments coming in this gold jewelry, in fact, which has come back after some time in terms of people willing to invest in gold, and they're doing it through jewelry purchase. And there's obviously a season time, which is got a good marriage period. So I think the jewelry stocks are expected to do very well this quarter.
Okay, jewelry stocks is something that you're bullish on. What about exports? I mean, they're still weak, though we did see some good marine shipments to other countries to offset that US tariff impact. But rest, textiles, gems and jewelry, I mean, they continue to suffer in terms of export, markets. So, I mean, how should investors navigate? Because we still have that trade deal overhang right now.
Yeah, so I agree there's a trade deal overhang, but I think it's a matter of time. And a lot of indications are very clear that over a period of time this will get settled, and it can happen. If you look at even the interviews with the government people both in US and India, they have clearly indicated that they're very close to signing the deal. And in fact, if the deal happens, I think those stocks should be back in action. It's a temporary phase. Government has given certain exemptions to those exporters in terms of loans, in terms of interest payouts, and government is trying to help out those industries. I think it's a matter of time, and stock markets will take that in the stride. And I think we should move forward. Investors should look at their stocks, and I think we should wait. In terms of once the deal is signed, they should aggressively enter those stocks. And primarily, if you look at textiles and exporting companies, they will do very well once the deal is done. We are hoping the deal should be signed sub 20%, which will be very competitive with other countries. So effectively, I think this should be a good stock to enter. Again, a contrarian view, but eventually, I think it's dependent on the deal. And once the deal is done, I think there's a takeoff from there.
Okay. All right. What about banks? I mean, what are you more bullish on? Is it private or PSU banks? Because while we're anticipating some of the rate cuts to materialize next week itself, so do you believe that PSU banks are better placed compared to private lenders?
So let me look at both the banks. In fact, let me tell you, both the banks are doing very well, private and PSU. But between the two, the PSU bank has delivered better numbers. There are two things. If you look at the quality of assets, the balance sheets, more in terms of the way they have delivered numbers, the return on assets, I think they have been extremely good. They have surprised with the great growth, and they are far more becoming competitive. I think the valuation catch-up will happen with the private banks, and a lot of these PSU banks will move ahead. But if you look at the other space, which is NBFCs, I think that is also going to do very well, especially the large NBFCs. If you look at the large gold financing companies, I think with the gold prices being higher, there's a lot of room for them to lend more, to lend to clients, and their LTVs are getting positively impacted. So I think overall, the banking NBFC space with the rate cut coming in should be very positive. In fact, we are more bullish on large NBFCs as compared to banks.
Okay, all right. Let's also talk about an interesting brokerage note that came in on the real estate sector by Jefferies. Now, what they have said that is that after a festive-led slowdown in the month of October, November is showing a little bit of a pickup. What's your view on this particular segment? And of course, do you believe that the valuations have also corrected from how it was trading earlier? And anything that you're liking from the space?
So effectively, if I look at from a real estate point of view, overall the valuations have got a bit stretched. And once they get stretched, they need to correct. I think over a period of time, they are getting corrected. And the demand should pick on. In fact, if you look at especially the premium ones, I think that demand should pick up if you look at the larger piece. So moment that happens, we should look at, I think Bombay-based reality companies are looking good in terms of maybe you look at a Uptown, that's a good buy at the current pricing. If you look at, that's a stock one should look at in terms of the pricing have been good. They've been selling good stocks. I think they're doing some mergers as well to meet the private ownership as well coming in the system. So we can look at a Uptown stock for investment.
Okay, okay. Radha, what about IT stocks? Is that also one of your contra bets? Because, this month itself, IT stocks have seen decent traction. They've seen sequential growth in second quarter, but still, I mean, there's been a caution in terms of their weak discretionary spending.
So IT, I think, is a good contrarian bet. So effectively, I'd like to segregate between maybe a large cap IT and a mid cap IT. And primarily, we are more liking the mid cap ITs than that slightly smaller ones. So those are better off placed in terms of the growth. They have been consistently delivering growth. I think if you look at companies, we are looking at persistent LTM. Those are companies what we look at. And I think they are supposed to bounce back. But even if you look at from a contrarian point of view, Infosys or a TCS can also be played on, but with a slightly long-term horizon. So these are two things what we are looking at.
Okay, okay. What about defense stocks? How do they look like? Because we've seen that they've been one of the top outperformers so far this year, but in the last 1 month we've seen a little bit of a profit booking which has taken place in a lot of counters. So how would you see them valuation wise, and of course on the front of growth visibility as well?
So I think defense is an area where India is going to keep investing. If you look at, you hear all the governments and what they talk about. So it's very clear that there's going to be a spend which is going to continue. And by and large, 75% of the spend they would like to do within India and like to give it to Indian companies. They might collaborate with foreign companies here. But at the end of the day, the business will come to India. And business will come to most of the listed companies, maybe PSU or private. So the whole idea is that it's more of a wait time. There was a bit of correction in defense stocks. And they are waiting for a trigger to happen. The triggers can be more from government policies or from point of view of maybe big purchase orders, but it's a matter of time. I think India, given the geopolitical situation, defense expenses are going to continue. And given large defense budgets, I think there's enough scope for all defense companies. And we should make a pact in these defense companies and move ahead. I think that's a larger way of doing it.
Okay, okay, all right. All right. Radha, you did mention that despite Nifty hitting all-time high, we have seen that not really the portfolio has changed going ahead. And, right now we are seeing a, massive promoter selling and PE fund selling as well. So what would you advise investors to go about in the next medium term, so to say? I mean, should they be a little cautious until there is some growth visibility that comes in from these third quarter earnings?
I think, let me segregate the parts. So one is about promoter selling or maybe PE fund selling. But that is part and parcel of work what we are doing. Say promoter selling is slightly negative. But if you look at PE selling is anyways part of their business, what they do. So their business is into getting into companies and they're moving out and getting into newer companies. So effectively when a PE sells, they come back to the market with other investment. So at the end of the day, that should not hamper too much the market. Another piece is we should look at stocks more in terms of the way we look at the companies, not in general. So effectively, the valuations are important. And wherever the numbers of quarter 2 have come well, I think we should look at those companies and anticipate a good quarter 3 and quarter 4 earnings. I think the market should be poised for a growth for quarter 3 and quarter 4. Even quarter 2 numbers were very good. In fact, after a long pause, I think we have got a good set of numbers from most of the companies.
Okay, okay. So, I mean, what are you expecting for this FY26 growth to be looking like from an earnings point of view?
So that's a larger range to provide. I think we should have a reasonable growth. If you look at from a Nifty point of view, we are expecting about 30,000 Nifty in a year's time. So that's a good growth in terms of what we are looking at.
Okay, okay, okay. We discussed a range of sectors that you've been bullish on as well. But anything that you would advise investors to remain on the sidelines for the time being?
See, maybe pharma companies which are related to exports to US. I think that's an area where one should look at maybe a bit of caution. There also, once you get a clarity in terms of how the tariffs have emerged, what is the rate. So once that is done, I think we should become very aggressive on those companies. We should identify those companies and keep a close watch. Moment I think the tariff gets announced and we have a clarity, I think those companies should be lied upon because the growths are not a concern. The concern is more regulatory and more in terms of how Trump is going to behave in terms of tariffs. So moment that overhang is over, that should be looked at. But till the time, rather than maybe getting larger surprises, better to avoid and maybe on the sidelines. So that's one area. Apart from textile exporting companies, that's what I've told. So I think these are two sectors one should avoid in terms of till the time we get a clarity from US government.
Okay, okay, all right. All right, with that, we have to let you go, Radha, but thank you so much for your time and joining us.
Thank you, Lovisha. Thank you so much.
All right, that's all we have for this edition of Closing Bell. But yes, Nifty has been up and running for the third straight week. It has been up by about 0.5%, and it is the positive start to the December series. And we'll be watching out for more cues next week itself. Today evening, we'll be also having the second quarter GDP print number, which will be out and about for India. So we'll be watching out whether or not India sustains that 7% economic growth mark, which was there in the first quarter itself. But yes, more data to come in. Of course, next week we have the all-awaited the US Federal Reserve policy meeting as well, which is also there. And of course, we have the RBI policy meeting as well. So yes, all eyes will be on the rate cut journey and how the rate-sensitive stocks also react to it. But yes, until then, we have come to an end of this edition of Closing Bell. But before I let you go, let me introduce you to Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI-registered experts, pre-identified chart patterns and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So download the Moneycontrol app and subscribe to Super Pro today itself.